Welcome to the Deep Dive. We're here to cut through the noise and really pull out the key insights from important earnings calls. Today, we're diving into Quanta Services' second quarter 2025 call. They're a real giant in infrastructure and utilities. And this call, well, it gave us a pretty fascinating window into a sector just seeing incredible demand right now.
Exactly. And it's more than just the quarterly results. It's about getting a handle on what's driving this whole infrastructure supercycle. How energy needs are changing, what technology shifts mean for the future of the grid. We'll hit the numbers, sure, but then we really want to unpack the strategy, the big moves, and what it all means for you.
Okay, let's jump right in then. The results snapshot. Quanta put up adjusted EPS of $2.48. That beat the consensus, which was $2.44, so beat by 4 cents.
Solid beat.
And revenue came in strong too, $6.77 billion, also beat expectations. And that's, a 21.1% jump year over year. Significant growth.
Yeah, definitely strong growth. And if you dig a bit deeper, gross margin went up to 14.9%. That's up 40 basis points from last year. Shows pretty good operational control, I think.
Especially with inflation still around.
Exactly. Adjusted EBITDA was $668.8 million, so a 9.9% margin. Pretty solid there. And cash flow looked good, too. They pulled in $170 million in free cash flow for the quarter. Brings the year-to-date number to $288 million. That's a nice turnaround after Q1. Remember, they had that working capital build?
Right. And maybe the biggest number, the one that really screams long-term work, that record backlog. $35.8 billion. That's up 14% year over year.
Yeah.
I mean, that's just a massive pipeline of work.
It really is. Huge visibility. Although, it's interesting. The market reaction was a bit muted. Shares dipped a little at first and kind of settled.
Yeah, despite the strong numbers. What do you make of that? Profit taking.
Could be some of that, yeah. The stock had a good run. But maybe it's something else, too. Maybe the market already knows about the super cycle, right? That's not news anymore. The real question might be about execution. Can they actually deliver smoothly with these huge acquisitions like Dynamic Systems or, managing this new pole supply chain thing? Maybe the how is the bigger question mark for the market right now, not the what.
That's a really interesting point. It's not just the demand, it's managing the growth and integration. Okay, so let's peel that back. Strong numbers, huge backlog. What was management actually saying? What was the tone on the call?
Oh, incredibly bullish. No other way to put it. The CEO was very direct, said something like, demand for high voltage transmission, data center load additions, and grid modernization is unprecedented, and our diversified platform is capturing that opportunity. That's pretty confident language.
Yeah, you don't usually hear unprecedented thrown around lightly on these calls. And they backed it up, right? They raised their full year guidance significantly.
They absolutely did. Not just a small tweak. Revenue expectations are now $27.4 billion to $27.9 billion. Adjusted EPS, $10.28 to $10.88. And adjusted EBITDA between $2.76 million and $2.89 billion. Big jumps across the board.
Wow. Okay, so what's underpinning that confidence? Beyond just the general demand, acquisitions seem like a huge part of the story now.
Definitely. They've been really active. The big one, of course, is the $1.35 billion deal for Dynamic Systems. They describe them as a premier turnkey provider for mechanical, plumbing, process infrastructure, think complex industrial stuff.
Turnkey meaning they handle everything.
Pretty much. And then 2 smaller utility deals, about $227 million total, plus this strategic investment in Bell Lumber and Pole Company took a 40% stake. They're the biggest private maker of wooden utility poles.
Okay, so Dynamic Systems first. Why is that one such a big deal? Management called it the last major tool in the toolbox.
Yeah, that phrase stood out. What it means, essentially, is Quanta can now go after these massive multi-billion-dollar EPC contracts, engineering, procurement, construction, the whole package.
Okay, so they can manage the entire project lifecycle now.
Exactly. Things like huge data center campuses, hydrogen hubs, projects they maybe couldn't fully bid on before. It expands their scope dramatically.
And the pole company investment. Just securing supply.
It's more than just materials, though. That's part of it. It's about project certainty. Knowing you have that critical component locked down is huge when supply chains are shaky. It's strategic. These aren't just random add-ons. They're meant to work together.
Gotcha. And they also mentioned some big project wins, right? Like that Boardman to Hemingway line.
Yeah, a 300-mile high-voltage project, huge win. And management kept hammering this theme of visibility through a decade-long capital expenditure supercycle. A decade.
That's a long time in this business.
Yeah.
Shows real confidence.
It does. And operationally, look, they seem to be executing. Margins up, cash flow positive again. You mentioned the 18 straight quarters of revenue beats earlier. That buys them a lot of credibility. But it brings back that earlier question. Can they keep this up? Keep margins strong while integrating these big pieces and scaling so fast?
What do they say about margins going forward?
Management seemed confident. They talked about EBITDA margins getting towards 10% as they scale up and benefit from the project mix. So they think they can do it.
Okay. And they need the financial discipline for all this. What about their debt levels after the Dynamic Systems deal?
Yeah, they touched on that. Leverage is sitting around 1.6 times net debt to EBITDA right now. Their target is to get below 2 times by the end of the year, and they want to keep that investment grade rating.
So that financial footing is crucial for this whole pivot they're making, right? From just being seen as a contractor.
Exactly. It enables that shift. They're moving away from being seen as just a roll-up contractor, buying up smaller companies. Now the narrative is critical infrastructure platform, much more strategic, much more integrated.
And that platform idea lines up perfectly with these huge trends, doesn't it?
Yeah.
Electrification, AI data centers needing massive power, reshoring.
Perfectly. These are like the defining industrial trends for the U.S. for the next 10 years, probably longer. And Quanta's positioning itself right in the middle with the financial strength to actually execute on it.
They also mentioned some innovation stuff, modular substations, AI for inspections. How does that fit in?
It's about efficiency and tackling bottlenecks. The modular substations can speed up projects. The AI inspection stuff helps with asset management. And crucially, it can help address the skilled labor shortage, which is a huge issue for everyone in this space.
Right, doing more with the people they have.
Exactly. And, their performance reflects this positioning. Total return over the past year was, 55%?
Yeah, crushing the broader industrial ETF.
Right. A lot of that momentum before the call was already pricing in the AI data center boom and the grid spending.
One thing that really struck me was this idea of the fungibility of their workforce. Being able to move skilled labor between different kinds of projects. How important is that, really? Especially with everyone talking about labor shortages.
Oh, it's huge. It's almost like a secret weapon. Think about it. They can shift crews from, say, a wind farm project to transmission lines to substations, maybe even into some industrial work like healthcare facilities if needed. It means they're less vulnerable if one specific market slows down, like maybe renewables, if tax credits change unexpectedly.
Ah, okay. So it de-risks the business.
Massively. And in an industry where finding enough skilled craft labor is the challenge, having that internal flexibility, that ability to allocate resources efficiently, it's a major competitive edge. They can really operate as one big solutions provider.
You mentioned renewables there. What was the feeling about that market given policy uncertainties?
Management sounded pretty confident, actually. They said demand is still strong. And crucially, a lot of their customers have already locked in projects under existing rules. They've used the term safe harbored out to 2028, even 2029.
So those projects are likely to go ahead regardless of near-term policy shifts.
That's the idea. Provides a buffer. And they made a point of saying Quanta was in renewables before the Inflation Reduction Act. Suggests it's a long-term play for them, not just chasing the latest subsidy. They know how to navigate the regulatory stuff.
Okay. And the other big demand driver they talked a lot about was high voltage transmission, right? Those really big power lines.
Yeah, the super highways for electricity, especially the 765 kilovolt lines. You need these massive lines to connect new power generation like big solar or wind farms offering in remote areas back to where people live.
And also to handle the huge power demands from things like data centers.
Exactly. Data centers are just energy hogs. And this build out of the high voltage grid, it feels like it's still in the really early innings. It's a multi-decade opportunity, easily.
So looking forward, what are the key things to watch for Quanta?
Well, obviously, their next earnings call, Q3, that's on October 30th. Also, getting the final go-ahead, the notices to proceed, on 3 more of those mega transmission projects they have lined up. Potential awards from the Department of Energy for grid grants could be a boost. And just seeing how smoothly the dynamic systems integration goes, that's a big one internally.
And risks. External factors.
Things like federal tariff policies could always create bumps. And, labor availability is the constant background hum. Can they continue to find and manage the workforce they need? That's always something to watch.
All right. Let's shift gears to our favorite speculative segment. Time to channel our inner hedge fund manager. And just a reminder, this is purely for fun, for discussion, definitely not financial advice. Don't go out and do this trade. But given everything we've unpacked about Quanta, What's an outrageous but maybe plausible trade idea?
Okay, all right. Hear me out on this one. Considering Quanta's whole transformation into this critical infrastructure platform, their land and expand approach, plus this unprecedented demand from AI, grid modernization. How about this? You go long Quanta Services, maybe using deep in the money call options that expire, say, late 2026, gives you runway.
Okay, bullish on Quanta.
But you pair that with a short position in a broad, diversified utility ETF, something like XLU, the traditional utility players.
Interesting. So long Quanta, short the old guard utilities.
Yeah.
What's the thinking?
The bet is that Quanta, with its specialized full-service platform, is going to grab a disproportionate share of the high-growth, high-margin parts of this infrastructure build-out. Think complex transmission, data center power, the tricky stuff, and that they'll outperform the broader utility sector. Many traditional utilities are slower, more regulated, facing their own big spending needs, and maybe more political headwinds related to who pays for all this.
So it's a bet on the picks and shovels provider versus the asset owners.
Kind of, yeah. Especially a picks and shovels provider like Quanta that's adding all these capabilities, like from dynamic systems, driving synergies that maybe aren't fully baked into the stock price yet. Remember that muted market reaction? Maybe it signals a disconnect, an opportunity for someone with a longer-term view. It's definitely a conviction play.
Definitely outrageous, but I can see the logic. Plausible indeed. Okay, let's bring it back down to earth. So wrapping this all up, what's the big picture takeaway for you listening? Quanta Services is clearly trying to position itself right at the heart of this huge decade-plus infrastructure boom. Their acquisitions, their operational track record, their ability to adapt it makes them a really compelling story in this whole changing energy and data landscape.
Yeah, the main point is look beyond just the quarterly beats and misses. Understand the long-term strategy. They're aiming to be the go-to solutions provider for these critical high-growth areas. Data centers, advanced transmission, that paints a picture of potentially sustained opportunity. It's really about understanding those big underlying themes driving all this spending.
Absolutely. And as always, remember, we're just unpacking the information here. This deep dive is for informational purposes only. It is definitely not financial advice. Please do your own homework. Talk to a financial professional. Think about your own situation and risk tolerance before making any decisions. Let us know if you have more questions or other topics you'd like us to tackle.
Yeah, thanks for tuning in to the deep dive. We really hope digging into Quanta's latest call gave you some useful insights into what's happening in this crucial infrastructure space. Maybe leaves you with a question too. What's one piece of infrastructure you use every day, power lines, internet connection, whatever, that you now see a bit differently after hearing about the supercycle? Something to chew on.